Those days are gone. That ended with QE. That ended when they financially engineered the market in 2008. Gone. Now you got to follow the money. And we have the knowledge because we have the chart. Pro 2 color code chart tells you when to buy, when to sell, when to run like hell.
For a limited time, you can join Phil's Gang free for 10 days.
Check it out, philsgang.com. Get the truth, get the knowledge, and understand how the market really works.
There's a lot of noise out there in the financial world. Bank failures, interest rates, bonds versus stocks. It's a lot. That's why it's important to find a voice of reason that can guide you through these volatile times. Phil Grande and philsgang.com is where you can find honest, helpful guidance to successful investing.
Get the knowledge and understand how the market really works.
And for a limited time, you can join Phil's Gang free for 10 days.
philsgang.com. That's philsgang.com.
What if you could have an in-depth understanding of the stock market just like the pros? Well, thanks to Phil Grande and philsgang.com, you can. philsgang.com offers comprehensive, up-to-date market information designed to help you understand and anticipate market behavior. With philsgang.com, you'll build your investing confidence even through down cycles and periods of uncertainty. Go to philsgang.com. philsgang.com today. 877-600-GANG. 877-600-4264.
If you invest in the stock market, take a moment for this important advice.
Hi, I'm Phil Grande, philsgang.com. You've got to stop listening to the fake business news networks because they tell you what you want to hear instead of what you need to hear.
Phil Grande guides you step by step on investing.
You're going to know exactly what the tone of the market is. Do I sell? Do I not sell? Do I buy?
All you need to know is philsgang.com.
Check it out, philsgang.com, philsgang.com.
You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Our team is comprised of successful investors, all with proven track records. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Learn about common market mistakes and how to minimize them. Phil's Gang has successfully taught tens of thousands of investors how to navigate the market with confidence. You don't need to be a seasoned investor to benefit from the Phil's Gang platform, no matter what level of investor you are. Phil's Gang strategies for investing are designed to put you on the path to success. Sign up for a 10-day free trial to see our platform in action, avoid market pitfalls, and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
I signed up and I've learned an incredible amount from Phil and Steve. The staff at Phil's Gang gives platinum level service and stock recommendations. You know, it's as simple as that. At the end of a month or so, I've always been in the black. Phil's Gang is a class act. I'm happy to be a member.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264. When making wise investment decisions, Phil Grande has some sound reasons you should join Phil's Gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
Consumer sentiment has dipped. People now in the United States are actually expecting inflation. Their inflation expectations actually risen as well. Do you see meaningful reason for concern coming from the U.S. economy as of yet?
No, I don't. I don't see any meaningful concern in the U.S. economy.
Somebody told a lie one day.
That was one hell of a lie. Welcome, I'm Phil Grande, philsgang.com. Welcome to my podcast and radio show. Okay, what a week. But if you knew how to short stocks, this would have been a terrific couple weeks for you. It's sad to think that 80% of people who are in a stock market lose money. 80%. And for one reason. They don't know how to sell short, so all they do is buy stocks. And then when they start buying stocks, the old saying is, the more stocks you have, the more money you lose. Because the real truth about making money in the stock market, there's no such thing as a hot stock. That's crazy. It's the hot buy signal, which is a pattern. Think of it as a hot pattern. And the 20% who make money, they know one thing. If they have 5 or 6 stocks that they trade all year in a couple ETFs, and these got to be good stocks, of course. But when they sit back, they're waiting for the buy signals, certain patterns. And if you're waiting for them, they'll come to you. But if you're out there and every time someone on TV, Kramer or somebody else, gives you a stock and you write it down, and somebody else on another financial show gives you the hot stock and you write it down, and you're always running around buying stocks that you hear on TV, you never make money. Because again, they lie to you. There's no such thing as a hot stock. It's the hot pattern. And that's what you learn here in Phil's Gang. The patterns. What are the patterns? What are the buy signals? We even created our own chart. It gives you the buy signals that are so accurate because the chart's color-coded. We designed it 25 years ago. It'll turn red when money's coming up. And then when money's going to go back into your stock, it warns you, it turns yellow. Then it goes back into your stock, it turns green. That's been with us for 25 years. We designed that 25 years ago, and over 200,000 people used that chart through those 25 years. So, again, we're hearing now just so much garbage about this market and the tariffs and why is this we reversed this historic 3,000 point rally. A lot of it's just all BS. So I'm going to try to clear some of it up for you today. And let me just do this for you. Just give me 1 second. Get this up. I'm just got to enlarge it so I don't have to. Let me just enlarge it a bit. There we go. Okay, good. All right, so the reverse is because countries are losing confidence in our economy. In other words, they don't feel our economy is strong enough to make these deals. And by the way, the 75 countries that they tell us every day that contacted the White House, they have yet to make one deal. They have not made one deal. Now, the reason for that is the lack of confidence. And it wasn't over the tariffs alone. Everybody knows what tariffs do, and can cause inflation, cause recessions, cause markets to crash. We know that. It has a lot more to do than that, but they're not telling you. The bank, or you take the bonds, nobody's paying attention to them. It's the most important thing you can pay attention to. All of a sudden, the bonds, the treasuries, the long-term treasuries started to tank. And yields started to go straight up. That's bad news. Investors, especially overseas, they lose confidence when you start seeing the treasury market all of a sudden start tanking and yields rising. That's worrisome. And what caused Trump to hit the pause or panic button was the bond market. Scared him. Think about it. Because he thought, well, maybe I can get these 75 nations to sign a contract and get a few through, but I need some time, so if I cut rates, then at least everybody will calm down thinking, well, gee, he did a good job, he's cutting rates, because when you cut rates, everybody's happy, and also it'll fight inflation that's coming from the tariffs. Well, you couldn't do that, because cutting rates do the same damage as tariffs. So when he started to see the bond market start tanking, that's when he panicked. That's when he had to push the button, the pause button. And that's what led to giving the 75 nations a 90-day pause and 10% tariff. But there's also confusion with that. That's another thing that's going on. They're telling us that these nations are getting a 90-day pause and 10% tariff, but we're finding out that Canada and Mexico, they're not getting any of that. They still have 25% tariffs. And then there's also a lot of things that are exempt from tariffs. So it's very confusing what's going on. But China's going to get hit hard, 145%. But let's talk about, again, what really is taking this market down. Now remember, it's the bond market right now that's scaring everybody. The bond market's dropping, bonds are dropping. But again, on top of that, the dollar tanked. We had the biggest one-day drop since November 2022. Now the dollar, when that tanked on Thursday, that really panicked these other countries as to our ability, our economy, to make deals. Now remember, because the dollar for decades has been our safe haven. And going into the beginning of this year, Wall Street kept saying how the tariffs, was going to boost the dollar. And that didn't happen. And that his policies from the tariffs and so forth would spur growth. But we're not growing. Our debt to GDP growth is horrible. It's scary. We should be at 13%. Our debt to our GDP growth, we should be at 13 or 30%. And we're somewhere crazy, like 125%, 130%. I'll get your net numbers during the break. But so that's a real problem. So what I'm trying to tell you is this thing that, well, countries getting a little nervous. No, there's a whole host of things, a whole menu of things. And that's why it's going to be hard to get this market to rally again. I'll talk about that a little bit later. So the dollar for decades has been our safe haven. And that's blown up. That's a real problem for Trump. And the U.S. debt is so large that who wants these dollars? The appeal of the dollar as a safe haven, that's tanking because our debt is too big, it's too huge. And so, again, all of those things, and there's more, that's adding all these worries to these 75 nations, okay, who were talking with the White House as to the health of the U.S. economy to make these deals, and that's why there's no contracts. Add to that the stock market tanking. That's not helpful. That's not helpful. And then on top of that, we got countries that are losing confidence in our economy to make deals because they're worried that investors are going to be unwilling to hold our bonds. We're not going to get these contracts signed before they're unwilling to hold our bonds. That's what they're really worried about. And again, as I said before, they're losing confidence in our economy to make deals because the interest yields are at a record 3.2% of GDP because of our soaring deficits in debt. And our debt to GDP ratio should be 30%. It's 124%. So countries are totally losing confidence. So it wasn't this one thing that happened, okay, that caused this collapse in the stock market and then the rally to go back up and turn around and can't make new highs. Remember this rally that we had, the trends were down. All this was a short covering rally. People don't know the difference between a short covering rally and a bull market rally. And that's all we had was a short covering rally. If you knew how to short, you would have made a lot of money. But remember, when you short, you have to first borrow the stock from the stockbroker. And you say, look, the stock's at 100, I think it's going to go to $10. Can I borrow that stock? And of course, he's going to lend it to you because he believes it's going to go to 200. But when you borrow it, you got the right to buy that stock. Let's say you borrowed $100. You got the right to buy the stock at $10. Even though that poor guy bought it at 100, he takes the loss. And so when that happens, and all these stocks tank, and all of a sudden, like us, we had to go to get our profits, we had to go buy our stocks back. The rally starts moving up. And so you start getting this rally. And then you get all these tourists, we call them tourists, who don't know anything about the market. They just run around chasing everything. They start jumping in when they see the market going up. They start seeing a stock go up. They jump and get me in before it gets higher, get me in before it gets higher. They have no idea it's only going to go up a little ways, stop. Because they're buying, all these stocks are in downtrends. You buy stocks that are in uptrends. But all these stocks the other day they bought were in downtrends. That's why the next day we had the reversal, they all came back down. Because if you buy a stock in a downtrend as an investment, as a position trade, you're going to lose a lot of money. But if you do what we did, we take advantage of the short covering rally. We do swing trades that last for 1 day, sometimes 2 hours, sometimes 2 days. Because what we're doing is we're making money off the backs of the investors who are buying their stock back. We know they got to buy their stock back. If a stock was at 100 and goes down to $5, he's got to buy that stock back at $5. So we follow him. When he buys that stock at $5, we buy it. But it's only a short period of time. It's called swing trades. But people are buying stocks as if they were position trades. They're going to be in for months at a time. The market turned around. So again, there's a lot of things going on. Debt to GDP ratio that I just talked about. This is why the countries are losing confidence in our economy to make deals. I mean, they're losing total confidence in our economy. Now think about this. A lot of money is moving out of the U.S. They're selling U.S. stocks and buying overseas stocks. And last year, remember, our stocks went down 8%. Well, the German and Hong Kong shares have rallied 12%. So again, these 75 countries who are talking to the White House about these tariffs hadn't signed one contract because this is the stuff they're looking at. But nobody's going to tell you on these financial networks, these fake business networks. Corporate bankruptcies worry them. It's up 40%. year over year. We have more bankruptcies than we've had, worse than 14 years, but nobody's talking about that. We got 6.1 million homeowners behind on their mortgage, the highest number in 20 years. They're behind on their mortgage. And then the government, you know how they spend. They're spending 17 billion per day. They're only bringing in 12 billion per day. See, in this country, see that, and when they see that the debt ratio to our GDP growth is insane. It should be at 30, but it's at 124. Why would you want to buy anything from us? But again, make sure tomorrow we're going to have a class webinar on shorting, just shorting.
Want more information on this show? Go to philsgang.com. 7600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When the stock market is volatile, how do you invest intelligently?
Hi, I'm Phil Grande at philsgang.com. There's no need for you to be panicking in a market that goes up 800 points one day, 700 points, then it goes down again. All you need is good advice, need good direction. You don't get that from your CNBC and the Fox business and all these crazy shows. You don't. Here's what you get from them. Thank you, Jim Cramer. But this is something that this really bugs me. Listen to this.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What? Their responsibility is to their partners and shareholders and not to you? Check my site out, philsgang.com.
When the stock market is up one day and down the next, you need the experience of Phil Grande at philsgang.com.
What a difference it makes in your financial life. philsgang.com. It works.
Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang. Tomorrow, Saturday, from 12 noon to 3 in the afternoon Eastern Time, I'm going to be doing a webinar just on teaching shorting. It's such a shame that Wall Street, over all the years, been taking parking space in traders, investors' heads that don't you dare short, you're going to lose all your money. That's a bold-faced lie. You're going to lose all your money if you don't short. Just think about it. Your 401k, what you're going through in that 401k, you're just sitting there watching it go down, 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 right? When you could have offset that by selling it short, but no, they scare you to tell you, oh, you're going to lose all your money, it's dangerous. No, you lose your money by not shorting. Why do they do that? It's the same thing, by the way, when the ETFs first came out, oh my God. CNBC slaughtered them. You're going to get cancer if they're on your desktop, or you're going to, I mean, it's crazy, the things they're saying. They're trying to destroy ETFs because they don't make the money on ETFs as they make on individual stocks. And it's the same thing. Think about it. Why would they want you to sell a stock? They only make money when you buy stocks. So that's why 80% of people lose money. So we can help you with that. Okay, why don't you check it out? And so tomorrow it's going to be at 12 to 3 Eastern time. Now, if you can't make it, that's fine, because you still just pay your fee, and you'll have that for 3 weeks. So you go through it, use the short as many times as you want. But you should learn how to sell short. Just think of the couple of weeks you would have had if you were shorting stocks. And you're going to learn other things, like one of the biggest reasons people are losing money when the market tanked and after that big rally is because they don't know the difference between a downtrend and an uptrend. They never learn. People were buying stocks in a downtrend, but these stock candlesticks were going straight up on, what day was that, Wednesday? So they see a candlestick go straight up, get me in, hurry up, get me in. But they don't know what a trend is. They have no clue what it is. All they know is they see the candlestick going up, and they just get me in, hurry up, get me in. And then the next day it turns around and goes back down, because they didn't realize it was going up only because the people who were selling it short are buying it back. And then when they finish buying it back, it goes up about a quarter of the way, they push it up some, but you get the big move with new money coming in. But there's no new money coming in. The new money always comes from institutions. But the institutions, just what last week, a week and a half ago, already announced, they're not going to be participating in the NASDAQ, and they're not going to be participating much in the Magnificent Seven. So we'll help you, show you how to sell short. And as I say, if you can't make it tomorrow, you got it for 3 weeks. So that'll help you. You know, talking about all these reasons why the market tanked, you know, everybody puts it on the tariff. There's so many more reasons, but nobody's going to tell you the truth. You know, the top 10% in this country, they control, okay, or even the top 1%, and they control about 85% of the stock market. 85%, 1%. And the top 10% are responsible for 50% of all the retail spending. Think about that. Top 10% of our nation, the population, just 10%, are responsible for over 50% of retail spending. This is what's making investors nervous. And because of all the debt, the retail debt, we got historic now people that are missing their payments at historic numbers. And then another thing, when you think about it, the money was so easy. Think about NVIDIA in 2009. If you bought NVIDIA for $1,000, it'd be up $300,000. You'd be up $300,000 in profit today. If you bought Apple for $1,000 in 2009, you'd have a $39,000, almost $40,000. Netflix in 2004, if you bought that for $1,000 worth of shares, you'd have $500,000. I mean, since 2009, 2008, the tech stocks, let's take the NASDAQ, went up 1,200%. And the S&P went up about 600%. That wasn't from productivity. That wasn't from earnings. It's from a handful of stocks. We're in the same 7 stocks. But those days are over now. Now people don't know what to do. It was all that easy money. And they still will stay in those stocks thinking they're going to go higher because they don't know any better. It's not going to happen. The other thing that's confusing everyone with these tariffs, as I said, you have, when we were told that everybody was going to go, everybody's going to go on this 10%. Well, that's not true. We're finding there's a lot of countries still, like I told you, Mexico and Canada, they still have their big tariffs. And there's a lot of things exempt from tariffs. Gold, copper, semiconductors, pharmaceuticals, lumber. So there's a lot of things that are going on, okay, that are making this market difficult. So that's why you got to follow the money. not the noise. And following the money is the easy part. If you don't follow the money, you follow the noise, you're going to be part of the 80%. And think about when the market ran up from 2009 to 2013. Remember all the QE? The market from 2009 to 2013 went up 172%. 172%. But you know why it went up 172%? It wasn't on earnings. Because they printed and increased the money supply by $3 trillion. So $3 trillion bought us 172% in the S&P. Isn't that amazing? 14 trillion from 2009 to 2025. We're up about 800% in the S&P. That wasn't earnings. That wasn't productivity. We're not increasing production. I mean, think about it. 14 trillion to give us an 800% gain. See, we can't do that anymore because that's all inflation, and we haven't gotten that inflation out. And look what all these countries are doing. Okay? They're selling their treasuries. They're dumping their treasuries. Okay? Because their currency, like our currency, got killed from what they're doing. This QE crap to move these stocks up. So all the countries around the world are dumping our treasuries because they're trying to get back some value. So again, the thing I'm going to show you now is, and if you can see it here on my chart, when everybody started to buy the other day, and they were just going crazy buying, right? Remember, if you can look here, the trends were down, okay? See that? A trend is not up until this is called the stochastic line. And a trend is not considered going up, okay, until, let me see if I can get this out here for me. Can't get my pen here. Okay, let me try to get my, I can't get my pen for some reason. Let me reset it. So, I'll get my pen reset here, and then I'll show you what's going on. So in other words, everybody was jumping and buying the other day, thinking the stock market sell-off was done or just going to go straight up. They had no clue they were buying in downtrends. You can't buy a stock in a downtrend. You're not going to go anywhere. You go up maybe for a day or two, and then you give it back. So here, let me just show you. Here, now I got it working. You see this line here? That's called the 30% line. This yellow line and red line are stochastic lines, okay? That's momentum. So the trend of the money is going out. We're in a downtrend. That doesn't change until this red line crosses over the yellow line and then crosses over this 30% right here. So the majority of people didn't know that. That's why 80% of people lose money. So they all jumped in. They all jumped in right here on this day. Let me move, if I get this over here for you. They all jumped in right here, right? Look at this, all went up, right? Get in, get me in, get me in, get me in. But look at the trend. The trend is down. Because again, I'm showing you the trend here, you can see it. A trend is not considered reversed and going back up until it crosses this 30% line right here. So they went in and bought this stock, all these stocks, their favorite tech stocks, on a downtrend. That's why they've given back almost all of their gains, or most of their gains. If you look at some of their favorite stocks, okay, we'll take let's say Amazon, okay, one of their favorite stocks. Let's just look at Amazon, if I get Amazon up. Same thing here, look what's going on. They jumped into Amazon, buying Amazon in a downtrend, because once again, the trend is not going up, money is coming in and it's safe to buy until it passes this 30% line. And if you're using my color-coded chart, the candlestick has to turn green. So this is the day they bought. Look at this. This is the day they went in, all these people. That's why 80% of people lose money. They're near buying, and now they're giving that money back. And, I mean, there's just tons of stocks they did that with. Now, how you make money is doing what we call swing trades, where you go in and you take advantage of these people who are, remember, the reason why the stock is going up, the stock was going up, only most of the move in the stock is, again, where people are buying their own stock back. Then the other part of it is the people who don't have any idea what they're doing and they think the stock's going to go up for another 10 years and they jump in, they don't realize they're going to lose money. To take advantage of that, you just change over to my other chart and we do what we call swing trades. We take advantage of that move going up because then you have an uptrend because the time frame is condensed. So now you get an uptrend and you get green candlesticks, and that's how you make money over 1 hour, 1 day, 2 days. It's really day trading. It's called swing trading. That's how you do it. But nobody told these people that. So that day they jumped in. They all thought they're making money. Now they're giving it all back. And the important thing is learning how to sell short, because shorting is much easier than buying stocks. Why? Because when you short a stock, and on my charts, you can see my charts are easy. I designed these charts 25 years ago. It will turn red and tell you money is coming out. See, all you want to know about your stock is the pricing, okay? That's all you want to know, is money going in or money's going out. That's all you want to know. And that's what candlesticks tell you. You could be like what happened the other day. You're in a downtrend, the candlestick's going up, and people say, well, the candlestick's going up. I got to get in. It's turned around. No, the candlestick has nothing to do with it. The candlestick only tells you how many contracts are buy contracts, how many contracts are sell contracts, how many bulls, how many bears, who's winning the fight. And that's called pricing. So at the end of the night, if the bulls won, then that closes the market out, it's green. The candlestick's green. Or otherwise it closes red. So that's the only value you get out of the candlestick. It has nothing to do with the trend. So you can have a candlestick up 2-3 days, but if you have your downtrend, you're screwed. So why don't you learn how to sell short? The reason why shorting is so much easier than buying stocks, because people, when they short, they panic. And there's no stopping along the way. When people are buying stocks, people are always jumping in, they go up, then it comes back, goes up, comes back. Shorting, it's a straight shot down, and that's where people make big money. So join my gang, Phil's gang, or remember tomorrow, my workshop, my webinar, 12 to 3, and you have it for 3 weeks.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me to